Hello, I'm Steven the Calculator Guy, and I want to do a quick video on some of the things that I find interesting on the Near blockchain. If you don't know, Near is a non-EVM layer 1 blockchain. It has a bunch of incentives, and so it's pretty interesting for yield farmers like me. However, there is a barrier of entry, or barrier to entry, which is the fact that it is non-EVM and requires its own proprietary wallet thing. Right? So whenever I have to make a new wallet, usually I put it off and put it off and put it off until something happens that is so compelling that I put in the extra effort to make the wallet, set it up, and then fund it. Within Near's case, it was the Stader incentives. However, once I got there, I looked around and found some other interesting yields, and that's what I'm going to talk to you about. So first things first, how do you get Near onto the Near chain? Pretty simple. You can send Near to your Near wallet from any self-respecting centralized exchange that's worth its weight in salt. I use KuCoin and MEXC because those are the two centralized exchanges that let me do like perpetuals and also interact with a variety of blockchains. So I like those two. Now, of course, I onboard my assets with, Binance and Coinbase, but generally speaking, I prefer to use KuCoin and MEXC for getting onto new chains, especially more exotic chains. So anyways, setting up a Near wallet, very simple. You just go to wallet.near.org, and then you go through the same prompts you've gone through hundreds of times, I'm sure, to set up your Phantom, MetaMask, Kepler, Polkadot wallets, where you have some sort of key phrase and you regurgitate it back in some sort of prompt, and then you're good to go, right? And then you have to fund your Near wallet with Near. So if you want to do that in a way where you're not risking your Near, or you're not risking your initial capital, you just do it delta neutrally, right? So what you can do is like buy some Near, short the same amount of Near, so you're delta neutral, and then send the Near over, convert it to a stablecoin, and close your perpetual position. That's if you want to be fancy. If you're moving a ton of money, maybe, let's say, onto the chain, and you really don't want to be exposed to Near during that time. Up to you. You could do that. I'm not saying to do that. I'm just saying you could do that if that was what you were, thinking about. Anyways, let's dive into the yield opportunities and why I find them somewhat interesting. I'm not saying go ahead and invest. I just want to expose you to opportunities you may not have been aware of. So the first one is Burrow Cash. Burrow Cash is like the gentleman's money market. And I say this because it is not for degens, or it has sort of like a degen blocker, which is unfortunate for some, but probably better overall for the protocol. So here's what's going on, right? You can deposit these assets as collateral and get really attractive sort of single side APYs, 10% on stables, 10% to 11% on Bitcoin, same for Ethereum, 15% for Wrap Near. These are attractive APYs anywhere else in DeFi, right? If Aave had 10% on USDC, you can imagine it would have quadrillions of TVL. So just you have the additional difficulty of onboarding that USDC onto the Near ecosystem, right? Which I believe you can bridge from Aurora pretty easily, and you can bridge to Aurora pretty easily. If you don't know, Aurora, got a little asset down here, is an L2 EVM. What does that mean? It means the layer 2 blockchain built on top of the Near ecosystem that interacts very nicely with MetaMask. So what you could do is maybe go to, AnySwap exchange. This is the router? Yeah. Go to AnySwap as an example. There are many fantastic bridges out there, and bridge to, please tell me you can bridge to the Aurora I think you can bridge to Aurora here. Yeah. No? Yes. Okay, so you can bridge assets to the Aurora blockchain from AnySwap, and that will allow you to get assets to Aurora, and then you can bridge from Aurora to Near, your USDC, for example. So you don't really need to do any crazy delta neutral Near onboarding. If you just get a little bit of Near in there for gas, and then use Aurora, and I believe the Rainbow Bridge, is that right? Rainbow Bridge to go from yes. new transfer from Aurora to Near. Yes, connect. So by the way, this is how you connect your Near wallet. You just sort of click connect, and then you go through this little prompt, connect. Very similar to what you would do with MetaMask, just with a web app instead. Let's switch. I want to do from Aurora to Near. Continue. And you can see that you can send USDT from Aurora to Near, which is really nice. So that's how you would onboard your stables. Just thought I'd throw that in there. So anyways, Burrow Cash has these sort of nice opportunities, these nice yields, APY, but they don't let you benefit from looping. So if you wanted to benefit from looping, sort of tough cookies, you can't do that on Burrow. Effectively what they do is they cap your APY, and if you're looping, all of the additional APY you would get is nullified. You don't get any more. So there you go. But if you want to use these as collateral, like you just want to borrow against Bitcoin, bring your Bitcoin over here, borrow against it, bada bing, bada boom. Unfortunately, you probably have to buy the Bitcoin on chain, which no one really wants to do because it seems like it would be difficult to bridge Bitcoin on. Maybe there's another way to do it. I don't know what it is. Let me know in the comments. Don't get mad at me for not knowing, or get mad at me. I don't care. But for USDT, right? 10.55%. Maybe you want to bring that over here, borrow your Near and go get a yield on Near. Go for it, right? Anyways, let's move on. The next one I want to talk about is MetaPool. MetaPool is the very first, to my knowledge, liquid staking pool or liquid staking protocol on the Near blockchain. If you don't know what that means, it means you can participate in validation rewards, 10% on your Near, while having the ability to sell your asset, right? Generally with validation, you get locked up for a very long time. Here, you give them your Near, they give you a receipt, staked Near, and that receipt intrinsically gains value at about 10% APY over time. Now, if you know anything about STETH and Lido and that depegging event, you might be a little bit hesitant to invest in liquid staked assets. However, the major difference between STETH and the vast majority of liquid staked assets is redeemability or unstakeability. You cannot unstake staked ETH, not until about 6 months to a year after the merge. With virtually every other asset that is on a proof of stake blockchain, you can already unstake it. So you want to make sure you can unstake because that's going to strengthen the peg, I guess is what I will say. So in this case, you can unstake in 2 to 6 days for no fee, where you will receive your Near plus your interest back. Or you can unstake immediately for a 0.3% fee, which I really, really like. And I wish that more liquid stake protocols would add this feature because it's really cool. I don't know how many people would utilize it, but as an impatient person myself, maybe there's a lot of demand for it. So that's MetaPool. I appreciate them. I think ST-Near is great. You can also use them as collateral here for an additional 2%. So you're getting 10% plus 2 more percent or 3 more percent. Now, granted, Near gets more than that together. So maybe you want to use Near instead, but that's up to you, right? All right, let's move on. Pemrock. Why do I like Pemrock? Well, I like Pemrock for 2 reasons. One, they have some very interesting yields that are levered up. So if you don't know, Ref Finance is like the go-to decentralized exchange for the Near blockchain, has the most TVL by far at $235 million over here. And the farms are sort of interesting, I guess. There's a really nice ETH BTC one for like 13% APY, or APR, sorry. That's interesting to me, right? ETH BTC, I think those two move together pretty closely. I wouldn't mind that. But Pemrock is where the degens go to play, right? You have ETH wrapped Near, which is a really nice decentralized finance bet that these two sort of assets move together somewhat similarly and both perform well together or perform poorly together at 118% APY. Similarly, wrapped Near BTC at 153% APY. So these two are pretty interesting to me. But of course, I think that ETH is easier to get on chain than wrapped Bitcoin is. To my knowledge, again, if I'm wrong, please let me know. USDT near at 129%. This is a nice sort of near play with a bit of a buffer, right? If you're not super long on near, you're not really sure what's going to happen. As near goes down, you end up with more of it. As near goes up, you're taking your profits. So that's kind of nice. Do remember that this is a leverage farm. So there are risks of liquidation if you're not careful, which is why these volatile pairs that move closer together are generally slightly safer, but of course you're exposed to more volatility. So if you wanted to attempt to neutralize this, what you would want to do is sort of short the asset you're more bearish on. That's up to you and your own prerogative. All right, one more thing I like about Pemrock. They have remarkably good APYs on their single side lending. So if you want to go be a lender on Pemrock, then you can do that and you can get rewarded pretty well. Now you're going to be rewarded in their proprietary farm token, right? Whatever it is, it's Pem, and you probably don't want that. I don't like assets like that. Could be the greatest protocol in the world. I just don't want these assets. I want realized gains, realized capital, fiat profits, or profits in terms of ETH or BTC, right? Anyways, the rewards come out once a week, which is going to be a little bit of like weekly sell pressure. But, you know, the APRs and APYs have been consistently good. So we have wrapped near 24%, USN, stablecoin, 23%, USDT, 21%. So that's really good. One thing Bitcoin, 23%. One thing I didn't mention is that on Burrow, you're also getting paid in Burr and USN. USN is a stablecoin, so that's cool. The Burr is one of these sort of inflationary farmish assets that I don't really care for, that I would be selling sort of as I got it and as it made sense in increments to sell it. Okay, so that's Pemrock, that's Burrow, that's MetaPool. Let's briefly talk about Stader. I am biased. I like Stader, right? I like Stader because they are on a bunch of different blockchains. Hedera, Polygon, Phantom, BNB, Terra, Near, and soon Ethereum, Avalanche, and Solana, for which I am also excited Now, they generally have all of these audited by Halborn, which is an auditor that I usually find to be relatively reputable and good. That said, this particular liquid staked asset, which was Near X, was exploited 2 weeks ago now, or like the Tuesday before last, I believe. And what happened was a bunch of Near X, which is their liquid staked asset, was minted and then sort of dumped onto the markets, devaluing Near X into nothing. Now, one thing you have to understand is that when you participate in liquid staked assets, the near you deposit goes off to validation, right? It's locked up in validation. So when someone minted a bunch of Near X, effectively what they were doing is minting a bunch of receipt tokens. So imagine that there's like a cache of gold and people have banknotes that represent a portion, their portion of that cache of gold. Now, then you have some sort of old-timey robber who comes and brings a bunch of fake banknotes, and then, you know, that devalues the banknote. This gets found out. They get rid of those banknotes, they make new banknotes, and the gold is still there, so they just redistribute the new banknotes. That's not a terrible scenario. The terrible scenario is where the gold gets stolen. That is not what happens with liquid staking exploits. In liquid staking exploits, the receipt tokens get, you know, copied effectively or reminted. So all of the Near is still there, and 100% of the lost funds will be compensated, will be refunded. So I like that. That was, for me, a big vote of confidence, not only on Stader, but also on liquid staked assets as an asset class. With bridge exploits, the gold gets stolen. With liquid staking exploits, the receipt tokens get exploited, but the gold is still there. So I think that's maybe hopefully a useful way of thinking about it. So in the next 2-3 weeks, anyone who had lost Near X or Near X LP will be airdropped those tokens from the Stader team. And the Stader team could have done a cop out and could have done like a partial refund. because they had a good audit and they still got exploited, but they're going to do a full refund, which I really do appreciate and respect. And that did give me a little bit more faith in Stader as a team. Shout out to you guys, Stader. Also, they have more audits coming as a result of this. Halborn did issue a statement saying, yeah, we missed this, new blockchain. We weren't really super ready for it, but we see what the issue was. We were sure it's not going to happen again, knock on wood. But they're also going to do a BlockSec audit, and they're going to have new eyes from Halborn and new eyes from other auditors on the contracts to make sure that, it won't happen again. So I appreciate that. Yes, they have unstaking. Yes, they have claiming. There is some number of days for unstake. Yeah, 2 to 4 days, sorry. They don't have the instant unstake like MetaPool does, but they do have a higher APY because they have an incentive program. It was basically like $150,000 incentive program that was going to last 30 days. That has been extended due to the exploit. So right now, current APY is sort of frozen at 19.81%. And then you can LP your near when these get started back up in the future. This is Jumbo, and this is Ref Finance. So when all of this comes back online, this would be a place where you could boost your APY rather substantially here, right? So one thing to consider when that happens. That's all I have for you guys. If you want to learn more about like liquid staking looping, and delta neutral farming, I'm making, knock on wood again, roughly 30 to 40% APR completely delta neutrally with stables and delta neutral plays. And we're talking about these plays constantly. I don't even look at TradingView anymore because I don't have to. All of my plays are delta neutral, and I'm getting, funding rate rewards. I'm getting yields, and we can all get those, right? These are accessible to any people, to any person, and I want you to have them too. But of course, I have a family to feed, so please support mi familia, by joining the Discord and being part of the greatest and smartest community in all of DeFi. Thank you so much for watching, and have a wonderful rest of your day.